one of Max's home events. I was a newer person into iMarkets Live.
Yeah, bro. I remember. Of course, of course. You said that. Yeah, dude. You were at Max's the other day, right?
Mm-hmm.
What's up? Yeah. Well, I'm gonna be back in like 2, 3 weeks, so I'll see you then. Make sure you're at that event, bro. It's gonna be
Yeah, definitely. I have Tuesday the 8th off, so looking forward to that. I couldn't go to the last one because I had work.
nice.
Elvis, Trevor, I saw your chat. What's up, guys? What's up?
What's going on?
I can't hear John.
Yeah, I can't hear you either, bro.
Right now?
Yeah.
I can hear you now.
All right, 1 second. Let me just get this headphone situated. My bad, guys.
Can't hear you again.
All right, well, I'll just rock it off the headphones. You guys can hear me fine right now, can you?
Yeah, I can hear you now.
All right, sounds good, sounds good. So pretty much everything I'm going to be running through with this is kind of just how to apply basics 1 through 4 and the technical analysis into the actual market. You know, these are kind of, some of the things are questions I had when I was getting started. Some of them are things that I think beginners should know when they're getting started trading. So with that being said, I'm kind of just going to start with this. This was something that really confused me when I first got started with trading. I didn't really understand what it meant when it said, you know, USD JPY. You know, what is that? What is 107? You know, what was $107.07? I didn't understand that. You know, so what a pair really means is, so when you're looking at it, the first, you know, USD, that's the first half of the pair. Pretty much what the USD JPY is saying is that the value of the US dollar in Japan is $107.07. So, you know, if you were to go over there and exchange the US dollar for the Japanese yen, you know, for every 1 US dollar you would exchange, you'd get 107 yen back. You know, kind of like the same thing with the NZD CAD. You know, if you were to exchange the 1 New Zealand dollar for a Canadian dollar, you would end up getting 91 cents. So that's kind of what a pair, like what it means, you know, that's what you're looking at when you're looking at that. Now, some websites that, am I sharing my screen?
Yeah, we can see your screen.
Okay. So some websites that I like to use, pretty much everybody uses these websites when they're looking at trading. Forex Factory is honestly like one of my favorite websites for trading because I do a lot of trading, like red folder trading. It's a strategy. I'll call later, kind of just going over that. But so Forex Factory, I can pull this up, show you guys. Forex Factory is going to look like this. Pretty much what it's going to do is give you all the major news for each country individually. So, you know, you come in here, you go to forexfactory.com. What you do is you click on calendar. And this is going to give you all the news previous and what's coming up at their times that they're coming up on the exact day. So
Do
this
you
way
check
can
this
plan.
every day?
What was that?
Do you check this every day?
Yes.
Okay.
You can kind of see the whiteboard in the background. We have like all the news coming up for the pairs we watch, like what days they are on that. But so the next news that's coming out is at 5:30 a.m. You know, this little green arrow right here is going to show you which one's the next one to come out. So it's for GBP. And then the orange folder, what that means is it's a medium impact. You know, a red one is a high impact. So kind of something that I suggest doing right when you get into Forex Factory is come right up here. Right where this little green arrow is right here, you click that and uncheck the yellow folder and the gray folder. A gray folder means it's a bank holiday and a yellow folder means it's a low impact. So both of those don't really affect the price of the market when it moves. You know, so red folders impact price like crazy and then orange ones just affect it a little bit. Now, not every single news is going to affect the market, you know, the same way, but it does affect it in some way. So like last night, yeah, it was last night. AUD USD, yeah, USD news came out, and when that came out, or okay, yeah, today's Thursday. I don't know what's going on. All right, so Wednesday, the AUD news came out at 9:30 p.m. So what happened with that is we placed a sell because the news was not as good as we thought it was going to be. It didn't turn out the way we thought. So we placed a sell, and it actually dropped 85 pips right after that due to the bad news. So you can really make some and catch some big moves with just going off the news. Now the next website that I would suggest is investing.com, and pretty much how this one works is you can search any pair you want. It's going to give you a technical analysis. It's going to give you news on that exact pair. So, if we're looking at AUD USD, you just come here, search it, click right on the pair, and it's going to pull it up. It'll give you a general overview of AUD USD. You can go over here. You can click news and analysis. This is going to pull up news that's specific just for AUD USD. It pulls it from all different sorts of websites and everything like that. So it's not just specific to one thing. And then you can come over here. It's going to give you a technical analysis. And on the technical analysis, I like this too, because if right here, it's going to go like, so if you wanted to click like the 5 hour, on a 5 hour chart, investing.com is saying that it's a strong sell. And you can go through that like the daily. It's going to give you all the levels for like RSI, stochastics, MACD, things like that, moving averages and everything. So investing.com is very powerful. And then it also gives you news for crypto. It gives you news for just like each country, kind of like Forex Factory does. So there's a lot of news that you can find on here. And another one that I like to use is called
from your experience in
BitScreener. And I use this.
From your experience in technical analysis, do you find their information to be pretty accurate?
Yeah. I do my own markups, and then I kind of figure out, and then I'll go to investing.com and I'll say, okay, I have what I say it's going to do. I go through with my indicators, and then I come over to investing.com and kind of check. I don't do it with all trades, but it is just a good reference to look at.
Okay, cool.
And then with BitScreener is pretty much just going to be all crypto news. So any news that you want for like Bitcoin, Ethereum, Litecoin, Ripple, Stellar, anything like that, Tron, you're actually going to be able to find it all on BitScreener.
Do you have a preference to which one you prefer using, or you just kind of use all of them?
Oh yeah, I use all of them. For my regular pairs, I use investing.com. For news based on the country, so you'll see like the Great British Pound, that's going to be news there, US dollar, the euro, the Canadian dollar, New Zealand dollar. So I pretty much just look at this for like big news for each country. This one's going to be for your regular Forex pairs, and then this one's going to be for your crypto pairs.
Cool.
I mark my charts up on MetaTrader 4 and TradingView. TradingView is mainly what I mark up my charts on. So TradingView is going to look like this. Let me just come to here so you can kind of see how to navigate it.
Hey, Jonathan, you have the strength one?
Right when you come onto TradingView, you're going to be, this is what you'll see. You'll come over here, you'll come to chart. And then normally what it's going to look like is this, right when you come on here. You'll have your candles. You're going to have pairs over here that you can go through. If you wanted to add a pair, if you want to add New Zealand dollar, Japanese yen, you just come over here, click that, and it's going to add it to your pair. You could go through, click them, and just go through each one. So that's how you come in here to get into TradingView. And then just kind of a little thing I wanted to say for any beginners that are on here is that when you're first getting started with trading, make sure you pick one pair or two pairs. When I got started, I picked Australian dollar, US dollar, Japanese yen, and I just focused on those. I focused on them for about 2 months straight, and I didn't trade anything else, but I didn't even look at any other charts. Unless I was taking swipe trades or something like that, I wasn't taking any trades in any other pair besides those, because I really wanted to be able to catch moves and catch patterns. And because of that, I was actually able to catch all of this. Oh, wait. Oh, I'm on the week. I was like, what is going on? I was able to catch all of this and all of this from just by watching AUD. every single day just doing AUD and then USD JPY. So make sure you're really looking at that. You don't want a lot of noise when you're first getting started trading because things get really confusing. You know, you'll see people with like all these indicators, Ichimoku, MACD, stochastics, Bollinger Bands, RSI. Now I'm going to go over those things, but when you're first getting started, I wouldn't really suggest looking into those, you know, because all those really are is just extra noise. It's things for you to focus on and confuse you. And then now kind of getting into where I start with when I'm trading, I always start with my week chart. Oops. Now when I start, the reason I start with my week chart is because I'm looking for structure. And I also switch to a line chart just because it's easier, you know, with that noise thing I was talking about, you don't want a lot of noise when you're first getting started. So the way I do it is I mark it up on my line chart so it's kind of just like, it's less noisy. You don't have all the wicks, the different colored candles and everything like that. It's just one line. And also, when I'm marking up my charts, I use different colors. You know, so for my week, I'll use red for all my lines. For my day, I'll use blue, 4-hour green, 1-hour purple. And the reason I do this is because when you're looking at the weekly, you know, say you go and you're down to the hour, you're looking for your entry point. You'll be able to see, okay, this is a red line. I know this is a weekly support or a weekly resistance. Okay, this is a green line. This is a 4-hour support or a 4-hour trend. So this way it lets you indicate between everything when you're moving on so you don't, you know, you don't get confused. So first thing I do, always do when I'm getting started, I mark up, you know, my trend on my weekly. You know, we can see that AUD has been moving up on an uptrend since 2016 on this weekly chart, always from the bottoms of everything. If you're not marking up with the line chart, if you're marking up with candles, always mark from the wick and not the body. The wick tells where price wants to go. Let me change these colors really quick. I'll come over here. I'll start marking up my trend or my support and resistance. Another thing too, when I got kind of confused, some people say floor, some people say ceiling, some people say support, some people say resistance, and it gets a little confusing. You know, what is a support, a ceiling, or a floor? Is a resistance a floor or a ceiling? How it works is your support is going to be your floor. So you'll have price coming down. It's going to hit this support and going to go up. It's going to support price. Now, your ceiling is your resistance. Price is going to stop and it's going to resist price from going through and then it's going to go back down. So resistance is a ceiling and support is your floor. Excuse me. So you come through here, marking up all my floors and ceilings. And then after I mark up my weekly support, weekly resistance, and my weekly trend lines, I just move right to the day, come over here, switch to blue. You know, and then I'll mark up my daily support and resistance. A way that you can identify, you know, okay, you want to know, so this point touches this line, but is it support or a resistance? If that line is respected more than 3 times, you know, 3 or more times, then I would consider a strong support or a strong resistance. So after I go through, I mark on my daily. I'll actually switch this over and do a trend line. Switch this to blue. And then I'll mark my daily trend. So got that. And then I'll switch to my 4-hour. And then once I switch to my 4-hour, always what I do is I switch back to my candles. And then from there, I mark up Fibonacci. Fibonacci retracement. Fibonacci is found in all aspects of life. It's an old mathematical equation. It follows the golden ratio. Pretty much what it is just numbers that are found everywhere in life. Like it's a sequence of numbers. So it starts off, it goes 1, 1, 2, 3, 5, 8, 13, 21, 34, 55. So they're all numbers. It's all like, so 1 plus 1 is 2, 2 plus 1 is 3, 3 plus 2 is 5, 5 plus 3 is 8. It goes in a sequence. But, you know, aside from that, it's found in all areas of life. You know, you can find it in how many petals are in flowers. You know, all flowers have petals in either 3 or 5 or 8 or 13. And then, you know, it's found in just the shapes of your ears because they have a perfect rectangle. And Fibonacci is very, very, very respected in life. And so Fibonacci can also be found and help us use in trading. So I always mark up my Fibonacci from the previous trend. So the previous trend was an uptrend. So I'm coming over here, dragging this from the bottom of the trend all the way to the top, and I come across. I drag it across so I can see where the levels fall in all of it. And actually we can change the color of this so it's a little bit easier to see. So you just right click it.
Previous high or previous low? Okay. Toujours, yeah. How do you do? Previous, comme you said, previous high. Right.
So we can switch it to, let's switch it to yellow. So you have these lines here, each one of these. Oh, that's actually terrible. I'll make it black. It'll actually be easy. There we go. That's a lot better. Okay, so personally, 618. So if you divide every number by every number in Fibonacci, they all land on 1.618. So that being said, 618 is one of the most important zones in the Fibonacci retracement. So you're looking over here. Obviously, you can see Fibonacci's respected here. Fibonacci's respected here. Fibonacci's respected all right here on this 618 level. And actually, price just broke through that 618 level, and it's coming down, and it's hitting this previous daily support. You know, it was a resistance, broke through resistance, came up, now it came down, and it's retesting on that resistance, and this is when it would be turned into a support. You know, it's no longer a resistance, it's retesting at its support. So I mark up my Fibonacci, look for my respected zones. You can see 382 is respected. It respects it on the wick on 618 here. Coming up, it's respecting on the 236 level here. So Fibonacci is very respected. Obviously, you can see that it follows it throughout pretty much this whole trend line. So after that, I'm going to come in here. So, you know, we use the week for the structure. The day is for the direction of price. We're looking 4 hours for our confirmation. You know, now are we looking to buy? Are we selling? So I'll come back over here. You know, this is looking like it, you know, it broke through. So I would look to say, okay, is price going to turn around right here? Once it hits this, is it going to go back up off the support, or is it going to break support and continue down? So I would be watching right here saying, okay, what am I looking for? What I would look for here is to wait and see if we're having price, you know, break through here or not. And I mean, as of right now, it looks to just be sitting at this level. We could switch to this 1 hour, and the 1 hour is going to be where I look for my entry point. Personally, I think I'm looking for a buy on AUD USD, a longer term buy on AUD USD. So I'll switch to my 1 hour. We can see that price is kind of cooling back up off this, so it just respected it. Now we'll wait for the next 2 or 3 hours, maybe 4 or 5. You know, it could be a day, but we're going to wait and see if price is moving up or down from here. You know, if it breaks this, we're going to wait to see if it comes down to this next level. So we can come in here and start marking up our hourly support resistance. Switch this to purple. So respected zone here, hourly. So this would probably be my next zone that I'm looking for. That's actually pretty crazy. You can see that the wick came right down and touched this next support. So it broke through, and then it came down and touched the support, and it pulled back up. So that's an indicator of that price is going to be moving and reversing soon. But we'll still have to wait and see, you know, see if that price is going to turn around and go back up. So, okay, so let me identify consolidation for you guys. On an hourly chart, this is what consolidation looks like. This right here would be consolidation. Price is moving in a sideways motion. This right here is consolidation. Price is moving in a sideways motion. Oop. Consolidation, breakout. So those are all consolidation zones. So Fibonacci, I do this on my 4-hour. So this is a big thing for indicators, okay? Indicators tell us what the market's doing and not what it's going to do. You know, the market price is moving indicators. Indicators don't move the price. So when you're seeing, you know, you can't make a trade solely off the fact that Fibonacci level is respected, or you can't make a trade solely off the fact that, you know, RSI is below 30 or RSI is above 70. You know, you can't make the trade solely off those ones, off just an indicator. Indicator is just another confirmation. So that's another thing too. When I'm trading, I'm looking for 3 to 5 confirmations before I actually take a trade. I'm looking to see, okay, is this following a trend? I'm looking to see, is this following support resistance? Is Fibonacci respected? Is RSI respected? Is stochastics respected? You know, are these zones overbought or oversold? So these are things that I'm looking at when I'm trading. So I kind of want to show you guys how to add indicators now on TradingView. So you come up here to indicators. You can come down here. We'll start with RSI. Come down. RSI is relative strength index. So it's not going to say RSI, but you know, it'll say relative strength index. You're going to add that. Now the two respected zones for RSI, I can actually double click it. The two respected zones for RSI are 30 and 70. 30, pull this up so you can follow. 30 is, you know, if price is below 30 on the RSI, that's going to say that price is oversold. And if it's above 70, that means that it's overbought. So if we're looking for a buy, which I'm looking for a buy on AUD USD, I can see that price is below the 30 right here. So that means it's oversold. So since it's oversold, that's an indicator that price is going to be going up soon into a buy. So now I have another confirmation for the buy. So 30 and 70, those are the levels that you're going to want to look for RSI. And then you're going to want to look for, will you move your phone, please? You're going to want to look for price going below 30 or above 70. I don't really like to trade when there's, you know, consolidation or just kind of like in the middle of RSI. Well, I don't use it as an indicator if it's, you know, just consolidating or sitting in the middle of those zones. So come back here. Now stochastics. Stochastics is another moving indicator. It's over 50 years old. People have been using it forever trading forex. So come up here. Come down to stochastics. Pull this up. So again, the levels we're going to want to look for stochastics is 80 and 20. The blue line is your K%. The K% is meaning that it's the market rate of the current pair. So it's an average. It's an average of the current pair. So that's going to be your blue line. Your blue line is your K%. The red line is your D%, and what that is it's the 3-day or 3 period. You know, if you're on the day chart, it'll be the past 3 day moving average of the blue line. If you're on the hour, it would be the past 3 hour moving average of the blue line. So the red line is the moving average of the blue line, and the blue line is the moving average of price. Or yeah, price. So now you have what you'll do when you're looking at stochastics. When blue line crosses the red line, that's an indicator of price starting to move back up. Now vice versa over here, when you have the red line crossing the blue line, that's an indicator of price going down. And you can clearly see, you know, price crossed the blue line right here and shot down. Price is crossing the blue lines, crossing the red line, starting to go back up. So we're looking for a buy. The two major levels are 20 and 80. Under 20 is indicating oversold. Above 80 is indicating overbought. Price is below 20 right now. Blue line's crossing the red line. We're looking for a buy. But remember, like I said, indicators aren't indicating what price is going to do. They tell us what price is doing right now. So then we have Bollinger Bands. Pull those up on here. I'll get rid of these. Make it a little bit easier to look at. Actually, what I'm going to do really quick, just to kind of show you Bollinger Bands, I'm going to clear everything so it's a little less noisy. So the Bollinger Bands, what they are, they're estimated moving averages. So you have this one's a moving average, this is a moving average, this is a moving average. Now, the top, when price hits the top of a Bollinger Band or the bottom of a Bollinger Band and goes the opposite direction, that's called a Bollinger Bounce. And what a Bollinger Bounce indicates is a move in the opposite direction. So it came up, hit the top of the band, did a Bollinger Bounce, and it dropped. Came down, did a Bollinger Bounce, it came back up, but it's still dropping. So we're still looking for price to keep moving in the downward direction, maybe for a little bit, or start moving up. The wider the bands are apart, then that's the bigger the moves are going to be. Consolidating, or if they're closer together, it's most likely going to be consolidating. And you can see that, like, bands are close to here, consolidating. The bands are very spread out, big moves. So that's how you use your Bollinger Bands. I mean, they're used to measure market volatility. They can act as support and resistance too. So you can see that here. Support, resistance, Bollinger Bands are falling, or this would be your support. So the Bollinger Band on the bottom of it's falling, comes over here, still is your support there. Right here, Bollinger Bands, that middle band right there is following this resistance. The top of the band is acting as a resistance right here as well. So you can use them for support and resistance. But like I said, you know, if you're just getting started, don't really focus too much on RSI or stochastics or the Bollinger Bands. You know, I did all of my trading in the beginning just with support, resistance, trend lines. I did Fibonacci and follow news, and that was it. That's all I used to trade, because the more noise you add, the more confusing it gets. So coming back over here. So these are times I would definitely say do not trade. Friday afternoons, because market's about to close. Weekends, obviously you can't trade. Market is closed. You can trade crypto on the weekend, so crypto's a little bit different than regular trading. Don't trade when sessions are closing, unless you're trading the crossover between the London session and the New York session. That's going to happen. So Eastern time for me, that's like 8 in the morning. That's when the New York session opens, and then the London session closes at 10 a.m. So right in that 2-hour spot right there, the market's very volatile. It's making big moves. It's going in different directions. So as a beginner, I wouldn't really suggest trading it. But if you're, if you know a little bit what you're doing, it's kind of fun to get in there and trade and start to learn and try to actually jump in and start catching some big moves during that switch to the session. Don't trade bank holidays. So if you do have your gray folders open on forex factor, or on the forex calendar, forex factory on the calendar, if you turn on your gray folders, what those indicate, turn that on. Did it even turn on? Oh, there just must not be any bank holidays. So a gray folder is a bank holiday. So right here, so I wouldn't trade NZD pairs on Tuesday, April 24th, because it's a bank holiday. Price is going to move. I wouldn't trade the Australian dollar on Tuesday, April 24th, because it's a bank holiday. It's not going to move. Same with the euro, because it's an Italian bank holiday. Those last all day long. I wouldn't trade those on those days. don't trade during Christmas. Don't trade during primetime TV events, so like big fights and everything like that. Major economic reports and news. Now, when you're a beginner, do not trade these because price does fake outs. Price goes in crazy haywire directions that you never thought it was going to go. You know, it's not very predictable when the big news is coming out and big reports are coming out. So as a beginner, do not trade those. But once you start getting more advanced, you can start doing what is called news trading and red folder trading. That's what I do right now is red folder trading, and I've been pretty successful with it. So that's why I'm going to run another training at another time on red folder trading. But you know, as a beginner, I would still suggest staying away from big news and then major economic reports. And then don't trade if you're angry. Don't trade if you're frustrated. Don't trade when you're tired. Don't trade if you're sad. Like, don't trade, because all you're going to do is you're going to make a trade that shouldn't have ever been made. You know, you're going to sit down and you're going to be like, you know, say you lose 20, 30 pips and you're pretty upset about it. Don't jump in another trade because you're going to take a trade going in. So that's a big thing with right here. You're going in to make money. You know, we're not in this to make money. We're looking to catch pips. Anybody can change their lot size, but not many people can catch 200 pips, you know, even if you're only throwing down a 0.01 as a beginner, and we're not really looking to make money right now. We're looking to catch pips. We're looking to learn how to trade forex. So that's why I'm saying, you know, don't trade when you're doing this, because you're going to jump in there. You're going to drop a bigger lot size. You know, you're going to take a trade. You're going to try to scalp and just jump right in and just try to make something that isn't possible of being made. And, you know, you're going to lose. You're going to lose every time. The markets expose people like crazy. Trust me, when I first got started with this, I was constantly posting like, I don't know how you guys are all making money. I keep losing money. But what my problem is that I would lose, and then I would try to take another trade and just be like, trying to make all that money back that I just lost really quick. And then I would lose more, and then I would lose more, and I would just blow accounts. And I blew like 26 accounts in my first month and a half of trading because I was constantly trading angry or frustrated or, you know, pissed off pretty much because I was not making money. If anything happens, I cannot stress this enough. Do not trade when your emotions are going haywire. Yeah, so I'm going to go back through really quick. I'm just going to mark up one more chart. I'm going to shut off these Bollinger Bands just so you guys can get that one more time on a different pair. So I'm going to come over here to the Euro odd. Come to my week. Switch this over. Switch my line chart. I'm going to mark up my trend line. Switch my color. Here. Make sure this is switched to red. And it's just little tedious work. It doesn't really, it doesn't make too much of a difference yet. Coming through here. Switch over to my day chart. Switch that color to blue. Ooh. I'm going to mark up daily.
Most friendly trading there too. It's stuff that most trades and more this. But you just gotta practice. Yeah, makes sense. But once you get the rhythm, basically.
You know, like I said, the reason you do the different colors is so you can indicate and see whether it's a weekly support or a daily support or an hourly support or, you know, a 4-hour trend. So we'll come in here to our 4-hour. This is where I'm going to mark up my Fibonacci. So I'm going to look for the previous trend. Oh, switch my candles. Lowest point to highest point. Drag it over. Now you can see you're looking for which zones are respected. So the 618 is a very, remember 618 is a very important zone. The 0.5 is a very respected zone. The 382, you might hear these as the 61.8%, the 50%, the 38.2%, 23.6%. Either way, you know, it's still the same exact thing. So now you're looking, you know, okay, price just broke this 0.382. Okay, so now we're going to look and see when's the next thing. So we're going to mark up my 4 hour now. So this is where I'm going to, you know, drop my trend lines. Green. Work right here. So now we're looking to see, okay, the next thing I would look for, what's price going to do when it gets to this zone right here? It already broke this Fibonacci level. Now what's it going to do once it gets to this zone? Is it going to hit? Is price going to come up to this zone, hit, and turn around? Or is price going to break through? If price breaks through, the next zone I'm looking for is right here, the next Fibonacci zone at 0.236. You know, it's respected. So that's the zone I would look for. Okay, now is price going to come through and break through this? After, if it breaks through this, the next zone would probably be about here. So that's all you're looking for. You're looking for zones. You're looking to see, okay, is price broke through this last support? The price broke through this last resistance? Where's the next one? You know, if it hits that, what can it do? Is it going to turn around? Is it going to go up? Once you get a little bit further into the academy, so pretty much this is just how to apply basics 1 through 4 in technical analysis. But once you start getting further in, you'll be able to identify pennants and flags and all these different things, bat patterns and all of this. So you'll be able to take it a little bit further. But as of right now, this is pretty much what you need to know. You know, what's price doing when it hits this zone? Is price breaking through this zone? And then where's the next zone it's going to go? That's what you're looking for when you're trading. That's the simplest way to put it. And that's what, you know, got me all my success once I learned how to trade. That's what made it easy for me to just be able to just pull up any chart. So like I said, I started with AUD USD. I started with USD JPY. And now I can just go, and you can see I have every pair open over here. I can just pull up a pair and mark it up and just do a technical analysis on it and look and see just by going, what happened at this zone? Where's the next zone? And then some book recommendations I have too. If you're just getting started with trading, I would definitely suggest Naked Forex and then Trading in the Zone. You can go on, actually, you know what? I know everybody in these are in all the Life by Design chats, LBD Trading in the other Life by Design chat. So I'll drop Trading in the Zone. I have the PDF of it. I'll drop that in the group chat. And then Naked Forex, I'll see if I can find it. I thought I had it, but when I find it, I'll post that in the group chats too. And they'll just be PDFs, and you guys can just download them right to your phone. If you have an iPhone, you use iBooks. If you have Android, I would suggest using Google Docs. Either way, you can have both of those books right on your phone. You know, super simple to look at. And I mean, other than that, that's pretty much where I'm at with, you know, being able to get started and, you know, being able to trade as a beginner. Let me come over here really quick. I just want to stop sharing my screen. Oh, there we go, there we go. Dope, 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 dope. I should be back now. So yeah, that's pretty much it for this trading training. If anybody has any questions, feel free to ask. I'll kind of leave it open for like the next 5 or 10 minutes just to kind of go through and see where everybody's at. If you want me to pull up another chart, or, you know, if you're kind of confused on support resistance or ceiling or floors, Fibonacci, RSI, stochastics, any of those things, feel free to ask. Mics are open now, so if you want to come in here and just kind of ask any questions, feel free. I see some questions in here. So yes, it's being recorded. What was the name of that website? Which website, Angel? I see we've got I've got all the websites here. Forex Factory, investing.com, and BitScreener. I can actually just type them in the chat. Forexfactory.com, investing.com. So those are the 3 websites that I use. Oh yeah, TradingView,
Appreciate that, man.
of course. TradingView.com. These 4 websites, these are what brought me all my success in trading. Let's see. I mean, honestly, that's it, guys. So I want to thank every single one of you for getting on this call. I hope I was able to provide some value. This call was recorded, so I'm going to post it into the chats as well. I'm just going to have to convert it. I'll post it up on my YouTube.
Hey, Jonathan.
Yeah?
Want me to drop the, you had the Signal Strength website?
The which one?
The Signal Strength. Like where it shows all the, I can drop it in there if you don't have it.
I don't think I do. Which one is it?
It shows you the red, the orange, the green bars on the strength of each currency.
No, I don't know what website that is.
All right. I forgot who taught me that one. I'll drop it in.
Oh, the one Zachariah was talking about. Yeah, that's that new website that they're talking about. I don't know the name of that website, but I would be very happy if you just dropped it in the chat.
Dropping in right now.
And then Thomas Galling, you said, so you suggest to not use indicators until we basically understand price action? And my answer to that is yes. You know, once you understand how to use, okay, Fibonacci, that's great. Use Fibonacci. I love Fibonacci. I use it every single time I trade. And then support resistance and trend lines. Learn how to mark those up. You know, if you're not using the line chart to mark up your support and resistance and trend lines, and you're using the candles, make sure you're doing it from the wicks and not the body. I can't stress that enough. Wicks, not the body, because what's going to happen is price is going to come up. It's going to go higher than the previous body, but it's not going to go higher than the next wick. So you're going to set your stop loss at a body when you should have set your stop loss at a wick, and your trade's going to close out when it actually did what you said you wanted it to do, but it just went and it tested the wick and not the body. So make sure you're marking up with the wicks. All right. Well, then, with that being said, I don't think we have any more questions. I want to thank each and every one of you for getting on this call. I know time is super important, and it's a Friday night right now, and everybody's on here. It's 10 o'clock Eastern time. You know, you could be out drinking, partying, smoking, doing whatever you have to do, and you came on here to learn. So I applaud every single one of you for doing that. But yeah, with that being said, thank you all for coming on here, and I hope I was able to provide a lot of value for you. I'm going to leave this open just for another 5 minutes, kind of play some music for a second, and just in case anybody has any more questions. But yeah, thank you guys for all getting on this call, and I hope everyone has a great night.
Bitcoin doesn't care what lost in each other's thoughts, running in the whispers of found me and I am so close. Found me as I ran away.